The investment thesis for OceanaGold is centered on an operational transformation from a capital-heavy development phase into a high-grade production harvest. OceanaGold operates as a mid-tier gold and copper producer with a geographically diversified portfolio that spans the United States, the Philippines, and New Zealand. The corporation is currently navigating a transition marked by the ramp-up of higher-grade underground operations at its Hile mine in South Carolina, the stabilization of its high-margin Dividend block cave mine in the Philippines, and a significant regulatory breakthrough in New Zealand that has accelerated the permitting of the Waihi North project, with a multi-year guidance projecting a 20% increase in gold production by 2026. The bearish case against OceanaGold centers on the potential for legal setbacks in the Philippines, environmental litigation in New Zealand, and technical challenges at Hile. The Philippine Supreme Court threat. The petition to nullify the Dividend FTAA renewal is the most significant tail risk for the company. If the Supreme Court rules in favor of the petitioners, OceanaGold could be forced to halt production at its most profitable mine.
Environmental opposition and legal delays in New Zealand. While the WNP received fast-track approval, the project is still facing intense legal pressure from groups such as Forest and Bird. A successful appeal could result in work stoppages or the imposition of onerous conditions that erode project economics. Operational execution and inflationary pressures. The 2026 guidance assumes a seamless ramp-up of multiple underground operations. Ore hardness at Hale has already been a bottleneck, and any further technical delays would prevent the company from achieving its AISC reduction targets. Project financing and capital intensity. The development of WNP requires a $1 billion New Zealand dollar investment. Any significant drop in the gold price would force the company to take on debt or delay the project. The bullish outlook for OceanaGold is predicated on three primary factors: operational delivery at Hale, regulatory stability in New Zealand, and superior free cash flow generation. High-grade underground ramp-up at Hale. The core of the bull thesis is the successful transition of the Hale mine. As the Horseshoe and Palomino underground mines reach steady-state production, the grade profile of the mill feed is expected to increase by over 20%. This higher grade is the primary mechanism for the forecasted reduction in AISC to the $1,000 to $1,200 per ounce range for the asset. New Zealand regulatory optimization. The Fast Track Approvals Act has fundamentally lowered the risk of project delays in New Zealand. By pulling forward the development of Wharekirauponga, OceanaGold has secured a decades-long production tail from one of the world's premier high-grade deposits. Margin expansion and capital returns. OceanaGold is currently generating a trailing 12-month free cash flow yield of 15%. Management's decision to use this cash for share buybacks and a double dividend demonstrates a commitment to shareholder value. Copper byproduct optionality. The copper credits from Didipio provide a unique hedge against gold price volatility. With copper demand expected to remain high due to global electrification trends, Didipio's contribution to revenue through byproduct credits remains a structural advantage.
Company overview. The portfolio's geographic distribution provides a balanced risk profile, blending the stable regulatory environment of the United States with the low-cost, high-margin opportunities in the Philippines and the long-dated resource potential of New Zealand. As of late 2025, the corporation has transitioned several key assets into higher-grade phases, which is critical for insulating the balance sheet against cost inflation and sustaining long-term free cash flow. Operating asset summary. OceanaGold's global operations are distributed across four primary assets with the following characteristics. Hile Gold Mine, located in South Carolina, USA, 100% ownership. It is a producing and expanding asset that utilizes both open-pit and underground mining to target gold. Didipio Mine, located in Luzon, Philippines, 80% ownership. This asset is in a producing and sustaining phase, utilizing underground block cave mining to produce both gold and copper. Macraes Operation, located in South Island, New Zealand, 100% ownership. It is a producing and life-extending operation that employs open-pit and underground gold mining. Waihi Operation, located in North Island, New Zealand, 100% ownership. It is an expanding underground operation focused on gold production. Hile Gold Mine, the catalyst for group-level expansion. Located in Lancaster County, South Carolina, the Hile Gold Mine is the primary growth engine for OceanaGold. Historically an open-pit operation, Hile is undergoing a transformative expansion following the ramp-up of the Horseshoe underground mine, which reached significant production milestones in 2024 and 2025. This transition is pivotal because the underground ore typically carries significantly higher grades than the surface pits, allowing for higher ounce production without a commensurate increase in mill throughput. Underground development and reserve growth. In 2024, the Horseshoe Underground Mine processed over 400,000 tons of ore, contributing to a record annual production for the asset. The long-term plan for Heil integrates production from both the Horseshoe and Palomino underground deposits, which are projected to drive the mine's output to approximately 315,000 ounces of gold in 2026. The economic profile of this production is particularly attractive, with an estimated AISC of $1,000 per ounce, significantly below the consolidated group average.
The potential for further reserve expansion at Heil is supported by a record $10 million exploration budget in 2025. Drilling has focused on resource conversion at Leadbetter Phase 4 and the discovery of new satellite deposits such as Pisces and Clydesdale. Significant drill results underpinning this growth include: despite this success, Heil has faced technical headwinds. Ore hardness has occasionally limited processing rates, and the complex sequencing of pit waste stripping in 2025 led to a temporary reliance on lower-grade stockpiles. Management's focus on ventilation and paste fill upgrades in 2025 is designed to debottleneck underground throughput and ensure that 2026 targets are met. The Dividend mine in the Philippines serves as a high-margin anchor for OceanaGold's financial performance. Utilizing an underground block cave mining method, Dividend produces both gold and copper. The presence of copper as a primary byproduct is a critical differentiator for the company, as copper credits materially reduce the net AISC for gold production, providing a competitive advantage over gold-only peers. Operationally, Dividend is targeting steady-state annual output of 100,000 to 130,000 ounces of gold and 12,000 to 15,000 tons of copper. Recent quarterly production has been impacted by planned mine sequencing and severe weather events, but the asset remains a primary generator of group cash flow. New Zealand has been the historic home of OceanaGold and continues to offer substantial long-term value through the Macraes and Waihi operations. The operating environment in New Zealand underwent a seismic shift in 2024-25 with the passage of the Fast Track Approvals Act and the Crown Minerals Amendment Act 2025. These legislative changes reintroduced the promotion of mining as a national objective and created streamlined pathways for projects of regional significance. The Waihi North project is perhaps the most significant undeveloped project in OceanaGold's global portfolio. WNP includes the Wharekirauponga (WUG) underground deposit, which boasts exceptional grades of 9.2 grams per TAU. In December 2025, the project received final permit approval through the government's new expert panel process, effectively shortening a multi-year permitting cycle into just 112 working days. Development of WNP is expected to commence in H1 2026, with initial tunneling focused on the Willows portal site. The project represents a $1 billion New Zealand dollar investment and is projected to extend the life of the Waihi operations through 2040. While gold production from WUG is not expected until 2032, the project provides a long-dated, high-grade production tail that supports the company's enterprise value. The Macraes operation remains the backbone of the company's volume production in New Zealand. Through the Macraes Phase 4 (MP4) project, the company is extending the mine life to at least 2030 by revisiting existing pits and processing low-grade stockpiles. In November 2025, the Otago Regional Council granted a 5-year extension to the mine's operating consents, ensuring continuity through 2030. Despite its maturity, Macraes achieved record annual throughput of 6.6 million tons in 2024, benefiting from higher gold prices that have made previously marginal resources economic. OceanaGold's financial profile is currently characterized by record revenues and a transition to a net cash position. The convergence of rising gold prices and expanding margins has enabled the company to simultaneously invest in growth and return capital to shareholders. Recent financial performance, 2024-2025, reflects this growth trajectory. Net profit, Q3 2025 profit was $87.2 million, with year-to-date 2025 profit reaching $301 million, surpassing the 2024 full-year total of $192 million. Free cash flow, Q3 2025 generated $94.4 million, contributing to a year-to-date 2025 total of $283.3 million. This compares to $245.2 million generated in all of 2024. The company's AISC in 2025 has been elevated due to the timing of sustaining capital expenditures and heavy waste stripping at Hale and Macraes. Management expects costs to decrease significantly in 2026 to a range of $1,400 to $1,600 per ounce.
As of September 30, 2025, OceanaGold held a cash balance of $335 million with no debt. This robust liquidity position allowed the company to increase its 2025 share buyback program by 75% to $175 million. Furthermore, the company declared a quarterly dividend of 0.03 cents per share, representing a doubling of the dividend payout from the previous fiscal year. OceanaGold is often viewed as an undervalued alternative to senior gold producers, offering higher growth potential at a more attractive valuation multiple. Relative valuation metrics. Benchmark comparisons as of early 2026 show the following. OceanaGold, currently trading at a PE ratio, TTM, of 21.6x, an enterprise value/EBITDA of 9.2x, and a price to sales of 4.8x. It has a PEG ratio of 0.8x and a return on equity of 19.5%. Kinross Gold, trading at a PE of 23.9x and EV/EBITDA of 7.9x with a return on equity of 3.5%. Eldorado Gold, trading at a PE of 24.7x and EV/EBITDA of 10.2x with a high return on equity of 58.6%. The forward-looking PE of 17.7x for OceanaGold indicates significant expected earnings growth.
The geological diversity of OceanaGold's assets is a key factor in its resource replacement strategy. Key exploration and development milestones include Hale, Ledbetter Phase 4 drilling confirmed high-grade underground potential, while the Palomino initial reserve added 380,000 ounces to the underground plan. The Pisces discovery identified a new high-grade zone south of the Horseshoe deposit. Waihi, an initial reserve of 1.21 million ounces at 9.2 grams per ton AU was established at Wharekirauponga. Macraes, mine life was secured through 2030 following a successful operating consent extension. Conclusion: OceanaGold Corporation is currently at an inflection point. The transition from the high-cost development cycles of 2023-2025 into the high-grade production cycle of 2026 is poised to deliver a significant step change in free cash flow and profitability. The 2026 guidance, which anticipates gold production reaching up to 620,000 ounces at an AISC potentially as low as $1,400 per ounce, represents a robust growth profile for a mid-tier producer. However, investors must remain cognizant of the tail risks associated with the Philippine Supreme Court challenge and environmental appeals in New Zealand.